Today is Friday, May 8th, or March 68th, depending on how you look at things. And I've got a quick update and a strategy for business owners today. So today, the Prime Minister announced that the CEWS program is going to be extended in length. So that's the Canada Emergency Wage Subsidy Program that provides the 75% wage subsidy for eligible businesses. No further details were provided, but I imagine that we'll hear more next week. In this video, I want to give you something to think about with respect to the CEBA. And very quickly to recap, the CEBA is the Canada Emergency Business Account, and this is the $40,000 interest-free loan program. 25% of the amount you borrow can be forgivable, and here's how that works and how you could potentially maximize that. Many financial institutions offer the CEBA as a revolving line of credit until the end of this year, at which point it converts into a term loan. In these cases, the line of credit is interest-free, and the term loan is also interest-free from January 1st, 2021 until December 31st, 2022, so for 2 years. Now, on January 1st, 2023, it would then convert to a 3-year term loan with an interest rate of 5%. Some financial institutions have explicitly indicated that no principal repayments are required until December 31st, 2025. Now, the details may differ between financial institutions, so make sure to check the fine print with your particular bank. And that being said, if you do qualify for the CEBA and you are thinking of not using the full $40,000, you may want to. And you may want to keep that balance at $40,000 until at least January 1st of 2021. That's the day when the 25% forgivable balance is calculated according to the fine print for a number of lenders. So what this means is that if you wanted to get the full $10,000 possible loan forgiveness, you would need to have a $40,000 balance on January 1st coming up on 2021. So if you paid back part of the loan before then, or only used $20,000, then the maximum forgivable amount would be $5,000 in that case. So again, what this means is that so long as you are using the funds for non-deferrable expenses, a requirement of the CEBA, you should indeed consider maximizing the amount you can borrow in this case. You do not incur interest, and you can increase the assistance available for your business. And non-deferrable expenses are things like rent, payroll, property taxes, and so on. So, a lot of your expenses. To qualify for the forgiveness, you just need to pay 75% of the balance owing as of January 1st, 2021, again, according to the fine print offered by many financial institutions. And that 75% balance owing needs to be paid by the end of 2022 in order to get that forgiveness. So you've got 2 full years after January 1st in order to pay that 75% balance off. So when it comes to managing your business's cash flow, it can make sense to fund your operating expenses with the CEBA, take the cash flow you otherwise normally would have used and set that aside, or use it for other purposes to help your business, and then unwind it after January 1st. Again, make sure to check with your particular financial institution for the details and how exactly they administer the CEBA, but it looks like this planning could help you maximize your assistance from the government. Now, one thing that does not yet seem to be clear is the tax treatment of the forgiven loan balance. In other situations, we see, employer loans to employees where a loan balance is forgiven. Generally, that balance that is forgiven is treated as taxable income, so I would presume for now that any amount forgiven under the CEBA would be considered as taxable income to the business. But again, I haven't seen this clarified anywhere yet. Better to be safe than sorry, so I would assume that it is. Subscribe to my channel or follow my feeds, depending on where you are watching this, to keep getting updates like this. Stay vigilant, stay safe, and I will see you in the next video.